Hello. An investor today has plenty of options when it comes to fixed income investing. Many people have their savings in Employees Provident Fund, Public Provident Fund, small savings schemes, bank fixed deposits, and so on. These are excellent choices and meet a specific need of investors. Government small savings offer complete safety of principal and interest, and rates of return are also quite attractive. However, they offer poor liquidity as money is typically locked up for 5, 7 or 10 years, and again the taxation is not very efficient given that investors pay tax on the entire return amount rather than only on the post-inflation real rate of return. The two exceptions to this are Public Provident Fund and Employees Provident Fund. Bank fixed deposits are also reasonably safe and come with insurance against bank defaults up to rupees 5 lakhs. Hence, they can be considered very safe. The liquidity is also very high as one can break the bank fixed deposits on demand. However, the rate of return on bank deposits has been coming down in the recent years, and also there is this element of tax inefficiency where again you pay tax on the entire return amount. People in the higher tax bracket also have a problem after the recent budget amendments where contributions above a certain limit are not tax free and you end up paying tax on the interest amount on the higher contributions. Parag Parikh Conservative Hybrid Fund attempts to fill this gap in investors' needs. The Conservative Hybrid Fund will invest a minimum of 75% of its assets in debt instruments. These will be instruments like government securities and high quality PSU and corporate bonds. These are reasonably safe instruments and offer a reasonably attractive rate of return. The Conservative Hybrid Fund will also invest a small portion of its investments in equities, real estate investment trusts, and infrastructure investment trusts. These investments will give some element of inflation protection. Investments in the Conservative Hybrid Fund in the growth plan and which are withdrawn after 3 years will get indexation benefits while calculating capital gains tax. Hence, only the post-inflation returns will be taxed at the rate of 20% plus applicable surcharge. For people having regular cash flow needs, the withdrawal can also be made on a systematic withdrawal plan on a monthly basis. And given that the Conservative Hybrid Fund will be an open-ended fund, there will be good liquidity of investors. Thank you.
The product labeling assigned during the NFO is based on internal assessment of the scheme characteristics or model portfolio, and the same may vary post NFO when the actual investments are made. For SID and other scheme related information, visit amc.ppfas.com/ppchf. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.